What's going on, traders? I wanted to do a quick video addition to a thread that I am making here below about a powerful way that price is delivered within the market, and that is the Wyckoff Market Cycles. You will find this pattern or cycle repeated in the market again and again and again in various time frames. But I certainly enjoy looking at it from a daily perspective just to kind of get a broader sense of what's going on in the markets. And we have a really nice example here on IWM, which we will go through together, and I will put together, some key points on the Wyckoff market cycle as well. So you'll have some visual aid as well as some text to read. So we're not going to go too heavy into it here on the video, but I thought it still would be helpful. And the main things, the main phases in the Wyckoff cycle are the phases of accumulation and distribution. So, accumulation is where institutions are basically accumulating a particular stock or index, and it trades in a range for a while, but does not break lower outside of this range typically, and then makes a sharp move up. So what do we have right here? Whoops. Okay, what do we have right here? We have a classic accumulation phase in the markets. So let's mark it off right here, and we'll just put this in like so. Whoops. Okay. All right, let's make it a little bit bigger. Okay, so this is where right here you can see the market is being accumulated, does not really violate this box as it just goes sideways. And then the next phase of the market is when it breaks to the upside, right? And it breaks up, and that's called the markup cycle, or part of the cycle. So the markup, as you can see, we push out of this accumulation zone here, we mark up, and the second part is going to be a retest or a retracement. It doesn't happen all the time perfectly, but it can often. In this case, it did. Price will come back and then retest the top of the prior accumulation. So you can see right here, price came up, came back, retested, and then you get the second phase of the markup. As you can see, it retests, grabs more liquidity here, and we get another move in the upward direction, right? Now, the second major phase of Wyckoff market theory is distribution, and this is exactly the opposite. Here you're getting, let me actually take that one off. You're getting sellers soaking up the buyers, and you just consolidate in another range type of pattern without moving higher. So you can see right here, oh, I didn't want to do that one. You can see right here, this going on, distribution, right? And they are basically loading and selling into any of these cells, and the markets are unable to push higher. And let's just duplicate that, so we'll mark it off right here, and we'll change the text. Okay, so accumulation, push up, mark retrace, markup 2, right? Okay, and then what do we get? We start to hang out here and we start to distribute it. It's no coincidence either that we are pretty much right at this prior area where we saw a major shift in the market as well. Now what happened? Okay, we started the second phase, and that's going to be the markdown. So accumulation, markup, retrace, and then markup 2. Distribution, markdown. And what do we get? The same thing but opposite. You can see here, this is the retrace, and if I, I'm going to have to go back. There we go. Let me actually make this a little bit bigger so we can actually see. We didn't quite get, well, we got there almost. Hold on. Okay, there we go. We almost got there. We get here on this daily candle, but you can see it does the same thing again. Here we have the retrace of this prior structure after this distribution. It came up, came back to retest. We almost retested it again here too. So distribution, and then we have the markdown phase 1, the retest up here, and then markdown phase 2. So same situation, just completely flipped. Accumulation, markup, retrace, mark 2, distribution, markdown, retrace, markdown 2. And then we wait to see if there's going to be another potential accumulation cycle. Now we don't know, obviously, if it is, there's a chance that in this case we could trade back into this prior accumulation zone. So maybe there might be a little bit more downside for us to come back in here and retest this area, but we'll have to see what price does. If it starts to look like it's building a base and we start to see price action do this but not actually break down, even better if we see a kind of a look below and then a recapture and then a further retracement, then we might have signs that we are going through the next phase, another phase of accumulation. And once that cycle ends, we will repeat the whole process again and look for the markup, retrace, and markup once again into another distribution zone. So that's pretty much it in a nutshell. It gets a little bit more complex than that. You can really dive deep into it, but I wanted to just kind of give a brief overview going over the Wyckoff cycle. Like I said, you're going to see it again and again. This has been around since since the early decades of the 20th century. Check it out if this is something that interests you. Again, Richard Wyckoff is the gentleman who invented it, but I really love studying it, love finding these patterns. They repeat themselves. The cycle just repeats again and again and again throughout the market. So once you understand this structure of the way a price is delivered in the markets, it can help you have a broader understanding of how markets work and the phases that they go through and repeat. All right, guys. Well, I hope you found this interesting and helpful. And yeah, take care. Let me know if you want more content like this. Smash that like button. All right. Bye-bye.